Welcome to Behind the Advice, the podcast for Australians living abroad who want to maximise their financial situation. I'm your host, Mitchell Kelsey, a financial advisor at Runway Wealth Management, and in each episode, I'll be sitting down with other experts and professionals to get their insights, stories, and expertise on key concepts for Australian expats, as well as providing my own perspective. With this being a financial podcast, there is a disclaimer, so any information that you hear in today's episode is general information only. It is not personal advice, so it does not take into account your personal situation, goals, or objectives. If you do need personal advice, feel free to reach out to us at Runway Wealth Management for personal financial advice. Welcome back to the audio version of the Runway Report Newsletter, our monthly newsletter for all things markets, the economy, and financial news out of Australia impacting Australian expats. Without further ado, let's get into the June edition of the Runway Report Newsletter. So each month, the agenda remains the same. There's a note from myself. We then get into an Expat Insight. We'll look through the market movements for the prior month, and then we'll touch on an economic update as well. Now, the note from myself this month is discussing the impact that currency movements can have on global investments. So the Australian dollar has eased slightly in May. However, it remains well above its levels from a year ago. So since about early 2025, the Australian dollar has generally been in a steady upward trend against most other major currencies. So this trend has really been underpinned by stronger commodity prices, a weaker US dollar, but certainly growing expectations that interest rates here in Australia will remain higher for longer. Now, for investors holding international assets through an Australian investment account, performance is typically reported on those investments in Australian dollar terms. So this is a really important distinction because currency movements can really meaningfully influence the investment performance, and sometimes that's not immediately obvious. Now, just for some context, so from an investment perspective, when you see the Australian dollar strengthen and you're holding international investments, those international investment returns can appear lower when we're seeing those in AUD terms, even if that underlying asset has performed well in the local currency. And then equally, when the AUD weakens and we're holding international investments, those international investments can receive a bit of a boost in Australian dollar terms, enhancing the overall return. So currency effects can, in essence, can either amplify or offset underlying investment performance, depending on the direction of movement of the currency. So for our clients, in terms of managing currency or currency risk, as it's referred to, this is managed through several strategies. So certainly maintaining a diversified exposure across multiple global currencies. So we're not just in one particular currency. And then applying select hedging strategies where it adds value or helps manage risks. So hedging is a strategy which essentially removes the volatility of investing in international assets. So you can use exchange traded funds that are hedged in Australian dollar terms, for example. So we use select hedging strategies from time to time. And then certainly just avoiding over concentration in any single currency exposure is another strategy we employ. So definitely understanding the role that currency has is essential when assessing investment performance and portfolio construction more broadly, particularly for globally diversified portfolios held on an Australian platform and held and reported in Australian dollars. The Expat Insight this month is just touching on Australians planning to return home with a foreign pension account. So this is a really common occurrence. Many Australian expats acquire a foreign pension during their time overseas. And I've seen it many times where expats assume that their overseas retirement savings will be tax-free in Australia or will just transition smoothly into the Australian system. So in practice, this is rarely the case, and Australia applies a very different set of tax rules. Now, the key distinction is that most overseas pensions are not classified as a foreign super fund or an FSF. So this is an Australian definition, if you will, and there's very few foreign super funds that meet this FSF definition. One that comes to mind is the UK pension scheme. So typically these will meet the definition of an FSS, but very few others will. And most foreign pensions are going to be treated as a foreign trust for Australian tax purposes. So this classification can have some significant tax implications. I've just listed out some examples here that typically will be considered a foreign trust, and the rules of Section 99B of the Income Tax Assessment Act 36 will apply in this instance. So US 401ks, some Canadian RSPs, Singapore CPF, Hong Kong FPF schemes, and typically UN pensions as well fall into that category. So this means if a withdrawal is received, so if you're making a withdrawal from one of these accounts while you're in Australia as a tax resident in Australia, it may be assessable in Australia, and the extent to which it's taxable is the taxable component generally relates to growth and untaxed earnings within that account from the inception of the account. The contributions, your contributions and employer contributions, this is commonly referred to as the corpus. That's generally not subject to further taxation. So you're typically only taxed on the gains or the investment growth on those foreign funds. So just some key considerations for those planning to return home and have a foreign pension account. You want to keep accurate records. You want to keep key records around the contributions that were made and the investment growth. So kind of separating that two is going to be crucial to determining the tax outcome when you eventually make a withdrawal back in Australia. But more significantly, timing is really critical. So the tax outcome in Australia can differ materially depending on when withdrawals are made in relation to your tax residency commencing. So in some cases, even the timing within a financial year can influence the tax position. So under the rules of Section 99B, if you make a withdrawal while you're still a non-resident for tax purposes and you return to Australia in the following financial year, typically that withdrawal will fall outside of the scope of ATO taxation. However, if you make a withdrawal as a resident or you return to Australia and resume residency in the same financial year as making a withdrawal, typically that withdrawal may be subject to taxation with the ATO. Let's move into the market movement section now. So just looking at the month of May here. So certainly global share markets continued their strong run in May. They reached new record highs as investors were encouraged by resilient corporate earnings, ongoing enthusiasm around artificial intelligence, and hopes that tensions between the US and Iran may ease. We saw oil prices move lower during the month, despite continued concerns around the Strait of Hormuz is still closed for the most part. Certainly driving share markets more recently is strong demand for AI-related products and services, so computer chips, data centers, digital infrastructure, really continued to support global share markets in May. The AI theme now is certainly extending well beyond the US, with strong gains seen across Asian markets in particular. So some key beneficiaries include Japan, South Korea, and Taiwan, where a lot of AI related demand is supporting technology and semiconductor companies there. And then certainly large US tech companies such as Alphabet, Amazon, Microsoft, Nvidia, they're certainly continuing to increase investment in AI capabilities. So the positive sentiment during May also spread to software companies with strong earnings from Snowflake and Okta, helping lift the MSCI World Software Index by 15% for the month. So certainly software as a sector has been underperforming since the start of 2026. So it was good to see a bit of a rebound in select software stocks. And just to note, with the market movement section this month, we've actually replaced two indices and introduced a new indice in the S&P Asia 50 index. So this is going to give us a better representation of what's happening in areas like Taiwan, South Korea, and just representing Asian markets more accurately as well. In Australia, the S&P ASX 200 index rose 0.8% in May, although investor sentiment remains somewhat cautious following another Reserve Bank interest rate rise in May. So the cash rate increased again in May, so that kind of subdued market sentiment on the Australian stock market. Performance across sectors was mixed, so we saw the resources sector gain 7.8%, so that was supported by stronger commodity prices. We saw healthcare fall 9%, that was weighed down by weakness in a few major ASX stocks. CSL is one of them. Utilities, the utility sector declined 7.6% as higher energy costs impacted profit expectations. Now, if we move to global markets now, and particularly looking at the S&P 500, it gained 5.5% in May, supported by strong corporate earnings and continued interest in AI-related investment. Now, the S&P 500 had 9 consecutive weeks in a row of positive gains. So it was just a spectacular kind of record-breaking period that we've experienced on the S&P, kind of looking at the US markets with the S&P 500. Elsewhere, we saw South Korean and Taiwanese markets delivered strong returns as investors positioned for ongoing growth in AI demand. So as you can see in the new index that we've introduced there, the S&P Asia 50, that was the best performing index throughout the month of May. It lifted, it was 18.57% higher. Just touching on an economic update. So in Australia, inflation certainly remains a key focus for investors and policymakers. We saw headline inflation rise 4.2% over the year to April. And despite coming in slightly below expectations, so expectations were for inflation to come in at 4.4%, it came in at 4.2%. It still remains well above the Reserve Bank's target range. So markets really continue to expect the RBA may need to raise interest rates again later this year to help contain price pressures. So most economists now are expecting another interest rate rise, but not until at least around August, September 2026. Now, as you can see in the chart here, this is reflecting the change in headline CPI, which is the dotted line, and then you've got the trimmed mean or core CPI, which is the orange line there. So both those lines are well above the target range, which is 2 to 3%, where the Reserve Bank wants to see the inflation rate. Some other key economic data releases in May included headline inflation. So as I mentioned before, headline inflation was 4.2, underlying inflation was 3.3%. So it was 3.4%, it increased from 3.3%. And then we also saw the unemployment rate rise from 4.3 to 4.5% in May. So we're seeing the labor market here in Australia loosening a little bit. Outside of that, we saw the Australian GDP, gross domestic product numbers, come out, which showed that the Australian economy expanded by 0.3% in the March quarter. And over the last 12 months, it's grown 2.5%. So not huge numbers, but certainly growing from where we were 2 to 3 years ago. Just a last note here on the economic update. So there's in the US, markets have increased the probability of an interest rate rise by year end following persistent inflation readings and a more hawkish tone from the Federal Reserve. And then as well as that, investors are also closely watching the policy direction of the new Federal Reserve Chairman, Kevin Warsh. So he was appointed in May. That's all for this month's audio version of the Runway Report newsletter. We look forward to bringing you further episodes in the future. Thanks for tuning in. Thanks for tuning in to today's episode. If you want to learn more about Runway Wealth Management and how we help Australian expats, feel free to jump onto our website, runwaywealth.com, and we're also on all the social media platforms.